Hello everyone, friends. We're here in sunny Montenegro at the Binance campus. With me is Kirill Khomyakov. Kirill is welcome. Yeshe is the head of Binance for the CIS, Central and Eastern Europe and Africa. And today we're going to talk about beginners. If you're a beginner, this video is for you. You'll find out when it's worth getting into crypto, whether it's too late to get into crypto now, and how not to lose your money. There will be lots of interesting insights, thoughts, and ideas, so make sure to watch until the end. Kirill, my first question for you. How did you personally get into crypto? How long ago was that? How did you get started? And what exactly are you doing at Binance now?
I've been in crypto since 2021. I've been working at Binance since January 2022. So it's already been 3.5 years. Right now, I'm responsible for emerging markets. That is, as you said, the CIS, Central and Eastern Europe and Africa. In total, that's 74 markets. Together with our team, our regional team that's based locally in each of these markets, we develop our business. That means we work on community building, marketing, operations, product, PR, and government relations. In other words, everything that can help position Binance more favorably in local markets, provide our users with the products they want to use, and help them get into crypto as quickly as possible. So that's exactly what we do regarding the topics we'll be discussing today. That's why I'll be very happy to answer them.
Okay, here's a question. In your opinion, what prevents newcomers from taking their first step into crypto, even though they've been following the cryptocurrency market for a long time, but something holds them back, something stops them from actually getting in? What do you think is the reason for that?
Well, I think it's the lack of knowledge and understanding of how it's done. After all, for us, crypto might be our main profession, but for the rest of the world, it's still a niche, product unclear, complicated, and possibly even dangerous. And accordingly, the lack of understanding of how to use crypto, just like with your digital bank or the Uber app or Instagram, is exactly what scares people away, because it's not intuitive and not entirely clear. But if you do a minimal amount of research, look at which exchanges exist, what positions they hold, how reliable they are, download the app, go through KYC and see how simple it actually is, then in principle, the experience now is already comparable to using your digital bank, both in terms of registering and managing the app and in terms of investing and tracking your portfolio.
So it turns out that the main obstacle is still a psychological barrier, where people still think that cryptocurrency is for geeks, that it's complicated with all sorts of registrations. But in reality, everything in crypto is already much simpler. And it's no more difficult than installing a mobile banking app.
Yes, of course. All exchanges are striving to develop their apps and make them as simple and user-friendly as possible, both for big traders and for beginners. So now everything is as simple, convenient, and safe as possible. There's nothing scary or dangerous about it.
Okay, all right, cool. What would you say to someone who wants to enter the world of cryptocurrency right now? Is it too late? Because Bitcoin is already almost 110,000. A lot of altcoins have already taken off too. And there's this narrative among regular people who haven't gotten into crypto yet that it's already too late, that everything's lost and we've missed the boat.
I'll answer here with words of CZ, our company's main founder and former CEO. He used to say that every year people tell him, well, it's probably too late now, that the previous rally was the final and the biggest one. But in reality, we're still very early in the industry. And what's happening now with Bitcoin and the crypto industry as a whole is really just the very beginning of this blockchain movement as a new kind of finance for the entire world. That's why I believe it's still very early. The trends we're seeing in the world right now are truly strategic, because when it was just users like you and me, enthusiasts, or maybe some developers trying things out, it remained a unique product just for geeks. But now when governments are buying Bitcoin, when huge companies are buying Bitcoin, when all the American markets, and not just American ones, are buying Bitcoin through ETFs, when all retail investors and companies are buying Bitcoin, creating their own storage, their own treasuries in Bitcoin, this is proof that it's no longer some niche product, it's truly mainstream. And over time, Bitcoin will become a full-fledged new gold. And all those enormous funds that are currently stored in gold will gradually flow into Bitcoin. And what we've seen over the past year is a very good signal that a new and powerful push for the industry's development has been made.
In other words, we have now, so to speak, moved on to a new stage in Bitcoin's development. We've gone from the phase where Bitcoin was mostly of interest to geeks, regular users, and advanced internet users, to a new level where governments are starting to take an interest in Bitcoin. And that's a whole different scale of money and interest in this asset, which could trigger a new chain of developments.
Absolutely right. That is, the adoption of the technology is happening not only at the level of retail investors and enthusiasts, but also at the level of entire economies, and the largest ones at that. We can see what's happening now in the US, and we can see what's happening in Europe. In fact, even in the smallest countries, all governments are either preparing their own regulations, have already introduced them, or are in the process of doing so. There are practically no countries left, even the smallest ones, that are still wondering whether or not to regulate crypto. Everyone already understands that it needs to be regulated. It's mainstream now, and it's part of our daily lives. Everyone is either preparing or has already introduced their own regulations, because adoption is happening at every possible level. So now the question is, who will be first? Whoever is first to create these Bitcoin reserves and attract institutional investors will come out on top. I believe the same story applies with the help of the retail sector as well.
Overall, we may be entering, or perhaps have already entered that stage where it's not just users or even millionaires competing for the supply of Bitcoin, but entire governments. And each government is trying to accumulate as many Bitcoin reserves as possible, recognizing the value of this asset.
So far, we haven't seen large-scale purchases from governments. There have been massive purchases from companies. For example, MicroStrategy buys Bitcoin every week, on Sundays, sometimes for more than $1 billion. There are other companies that follow a similar model. The American company War Liberty Finance has issued its securities for $12.5 billion. And they made it clear that they are using these $12.5 billion to buy Bitcoin for their treasury. A very simple business model. We will borrow money on traditional markets at minimal interest and buy Bitcoin because it will grow faster than any of our debt obligations. But governments are still not buying. When governments finally develop their own model for Bitcoin reserves and determine the sources for filling those Bitcoin reserves, not just Bitcoin, by the way, there are different coins in these reserves, and they start filling up their Bitcoin reserves, there will be even more purchases. And the more purchases there are, the higher the price goes. And it's not a matter of who is competing for the available Bitcoins. It's purely a matter of price. That's how exchange mechanisms work. If there are more buyers than sellers, the price goes up to stabilize the market. If there are more sellers, then the price accordingly falls. That's basically how it will continue to be.
Got it. Cool. So look, let's say we've now convinced the viewer that it's not too late to get into crypto, that there's still time, there's still a chance to make that very life change, right? In crypto, right? So where should you start then? If before you could just register on an exchange, buy Bitcoin, hold it, and that was pretty much it. There weren't really many other options. But now we have DeFi. There are all sorts of Telegram exchanges, some games, NFTs, and it seems like people get confused. They come in and don't understand where to begin. So what would you recommend? What are the first few steps? Where should someone start their journey in crypto?
First of all, you need to get a basic understanding of what this is all about. First, what is blockchain technology? Why is it so revolutionary? And why has an entire industry been built on iTone that is now overtaking traditional finance? And in a few years, traditional banks simply won't exist anymore because they can't keep up. What exactly is this blockchain? What is Bitcoin? How is it mined? Where does it come from? What's its total supply? What are altcoins? What are stable coins, right? So you can understand what opportunities exist in the market, because Bitcoin, which we've been talking about as an example, is the main one, the largest by market cap and the most widely used asset. But there are also thousands of altcoins which have much smaller market capitalizations and are riskier, but their potential for growth can also be significantly higher than Bitcoin's because their liquidity is much lower. That's why number one is education. There are plenty of resources where you can understand what blockchain, Bitcoin, altcoins, and stablecoins are in just a few hours. You can do this on Binance Academy or on your platform, or there is a lot of other information available on the internet. It's completely free and very convenient. If you want a cartoon, text, video, and so on, it's all there.
Hmm.
So I would say that's number one. And number two is not to invest too much right away so you don't lose it. Because as soon as people get into crypto, it's a new field. You can make good money right away, but you can also lose a lot just as quickly. So invest little by little, gain experience and knowledge, and then increase your investments.
Got it. Awesome. So basically, we focus on the basics to build a foundation, and then gradually, little by little, we try out some simple tools which expands our knowledge stream in crypto. And after that, we can branch out into DeFi. And what do you think? Is it worth jumping straight into DeFi? Or is that more like step 2 after you've onboarded through an exchange, learn how to invest and swap? Or can you start your journey right away with a crypto wallet and decentralized application?
Well, let's go back to the basics and talk about what DeFi actually is. So in our jargon, there are CEXs, meaning centralized exchanges like Binance and others, and there are DEXs, meaning decentralized exchanges. Decentralized exchanges are what we call DAOs. In other words, these are companies that aren't managed by any specific person, but rather exist independently on distributed servers across the network. This model has its own advantages and disadvantages. Speaking of advantages, it's unlikely that someone could just steal your money if they suddenly go crazy. Well, for example, like what happened with FTX, right? And also your account will never be blocked due to, say, a request from law enforcement for some compliance violation, or if someone sends you tainted crypto. Here you have maximum freedom and you don't even need to go through KYC to prove who is behind the account. So if you need anonymity, if you have any compliance concerns, or if you simply don't want to reveal your identity or share it, then this option is for you. But you have to understand that on a DEX, you need to be technically proficient enough to know how to use it. Because if you lose your keys, there is no administrator who can help you recover them. If you lose your password or your recovery phrase, your crypto will be gone forever. If you have any questions or run into difficulties, there will be no one to help you. So I would say that DEX is really only for very advanced users. In addition, on centralized exchanges, you can easily pay commissions, instantly convert any coin to any other, and deposit fiat money that is our traditional currencies, but on DEX, none of this is available. You have to know yourself where to pay the gas fees from. You need to have a separate amount of Ether or BNB or whatever the exchange operates on. And also the number of products available to users and the user interface are much more complicated on DEX. So I would say these are the advantages and disadvantages. For me, Delaware X is only for people who are already very advanced in cryptocurrency, not for beginners.
So basically, it's best to start out through an exchange with a small amount of capital. There you have all the same product staking, exchanges, features to learn about. And then once you have an understanding, gradually, if you want to protect your capital from possible issues, you can transfer it to wallets and so on. Tell us, maybe from your personal experience, could you give a few tips for beginners and principles, perhaps, or how not to fall for any fraudulent schemes? Because it's a really big problem. Beginners come in and people try to scam them everywhere. In Telegram chats, they create channels, for example, fake exchange channels with fake chats and try to extract money. They send emails supposedly from an exchange or wallet with incorrect links. So what are maybe 2 or 3 main principles to avoid losing money to scammers?
I even have a personal story about this. When I first tried crypto in 2021, I saw in my Facebook feed that Apple was finally doing a pre-sale of its own coin. And right now there was a unique opportunity to buy this coin. And I almost bought this coin through that Facebook ad. The only thing I couldn't figure out was how to send cryptocurrency to that third-party wallet. I called my friend to ask him how I could send them those few $1,000s. And that's when I realized it was a scam. Since then, the level of scams and fraudsters has significantly evolved. And of course, so have the security systems on centralized platforms. But at the same time, scammers and their capabilities have also advanced. We recommend a few things. First of all, we call it the DIOR abbreviation, which stands for do your own research. That is, every time you want to invest in some coin, don't be lazy, spend 20 or 30 minutes and dig a little deeper. What is this coin about? The basics. Visit their website, read their white paper. A white paper is a description of the project structure and its purpose. So the basic fundamentals, check which funds have invested in this project and whether there are any well-known names involved. Look into the team behind the project, who are the people building this startup or project. See if they have an online community, for example, if they have followers on Twitter, or are you the very first follower of this coin? Understand their tokenomics, that is how they plan to make money. If there is no tokenomics, it's purely a pump and dump. Yes, as long as people are buying, the price goes up. As soon as they stop, the price crashes immediately. So these are the basic things, and we have a lot of material on how to do this due diligence. It might take 20 or 30 minutes, but you won't lose your money and you won't lose faith in crypto. Do this. Second, you need to be very good at protecting yourself from scammers. Binance protects you from scammers on our end. We have certain risk controls in place. For example, if you're using your account and then out of the blue, you log into your account at 3 a.m. and try to withdraw the entire amount somewhere, the risk control will be triggered and this transaction will not go through. Or if you've always been here in Montenegro and then tomorrow you log in from Egypt, there will also be questions and a block will be placed for 24 hours. So we monitor both the transaction amount and various verification factors, as well as all sorts of risk-related things. That's why it's absolutely essential to always use two-factor authentication. That means using the Binance Authenticator, email, passphrase, and phone. The more, the better to protect yourself, because the weakest link in this chain is actually the user. Because scammers usually can't hack the exchange itself in most cases. After all, huge resources are spent on security, but they can always hack people like you, or
The user gives it away.
like you or me. Because now they use such advanced methods, AI, phishing, spoofing, impersonation, and you can never really tell who's writing to you. Is it your friend from school or someone else? That's why you also need to go through some very simple training, how to protect yourself and your data and not fall victim to a scammer. So basic things like enabling two-factor authentication, not clicking on any links from unknown addresses, not opening suspicious emails, and not communicating with strangers. By doing just that, you can protect yourself by 90%.
Yes, that's absolutely true. I found myself in those situations several times, even when I already considered myself a pretty experienced crypto user. But just out of carelessness, you're scrolling, you click a link, you're sure it's something safe, and then suddenly that's it. In my case, my wallet, I signed something by mistake and the money was gone. So you have to be careful and very cautious, because you can earn a lot in crypto, but one wrong move and you will lose everything.
We need to learn this, because unfortunately in our education system, neither in school nor in university, there is such a subject as
Anti-scam.
anti-scam, or there is no such thing. We all natively know how to buy things online perfectly well, but no one has ever told us how to protect ourselves from scammers. That's why it's absolutely necessary to learn this and not be embarrassed about it.
So here's a question. How can you actually tell the difference between useful educational content and noise or info gypsy nonsense? Because in crypto right now, there's a huge trend where bloggers, Instagram bloggers, Telegram bloggers create their own blogs and launch classic funnels with basically the same products, which have no real value but cost a fortune. People promise a life change, saying that if you take their course, your life will be transformed. How can you even filter out this kind of educational content? Because a lot of people fall for it, and that's really unfortunate. And then they end up with a negative experience, not just toward crypto, but toward the whole industry.
Yeah, well, I'll speak specifically about the crypto side of this education, okay? All of this education can be found completely for free. If someone is offering it for a fee, you need to understand what exactly the value is and assess whether it will actually be valuable for you or not. For example, Binance Academy offers all of its educational content for free. It might be the most extensive library of knowledge out there, and it's easy to navigate. You don't even need to be a Binance user for this. It's completely free. If there are other courses you want to take, try to understand what value they offer you. What is the value in them? Are these considerations specifically and precisely focused on you? Do they truly fit your unique situation, and so on? And carefully compare the potential value and significant benefits with the associated costs and expenditures. See how many people have taken these courses. Look at who created them, what kind of community the course has, what reviews and feedback it gets. At the very least, do this before you click the buy button.
Mm-hmm. Yes, that's great. Good advice. Thank you. And one last question, which I also often see from beginners who come to the Binance Exchange and ask this kind of question. They see a lot of trading pairs, and some people immediately get the impression or understanding that if tokens are on Binance, it means they've been vetted, it's not a scam, and it's safe to buy in. Is that really the case? Or even if a token is listed on Binance, should you still do your own research and study the project in detail? And even when buying some coins on Binance, you can come across stories where the project later shut down and was delisted from the exchange. So how thorough is the vetting process that the exchange conducts for the projects listed here?
That's a good question. We can definitely guarantee that it's not a scam, but we can guarantee the business model or that the project won't shut down. So when you decide to buy a certain coin, especially a small one and not Bitcoin, but some very small new token, you should know the following. Binance conducts detailed due diligence on this project and analyzes it much more thoroughly than you could on your own. That is, as I mentioned, we check the ownership structure, the investor structure, the business model, tokenomics, community, team, and roadmap. All of these things we examine in great detail. But of course, we cannot be held responsible if the founders end up arguing among themselves, if the team falls apart, or if the token turns out to be unsuccessful. That's why it's absolutely essential for everyone to evaluate any token from the perspective of economic viability. Things can change for them. Their community might shrink or grow. They might start receiving negative feedback from the community, or they could disappear altogether and pull a rug pull. So you can know that Binance conducted an initial assessment, but you absolutely must check all the current data yourself. You need to make sure that the project is developing as planned and independently assess the economic prospects of investing in a particular coin.
Got it. Makes sense. That's great. All right, Kirill, thank you very much for sharing your experience and advice. Guys, I hope you found this very useful and interesting. So please like the video, leave your comments, and ask any questions you still have on this topic. We'll try to answer all of them. Have a wonderful day, everyone. Bye-bye.